Hello everyone, welcome to the market opening bell on Monday, December 15th, your 10-minute guide to the stock market. The Hong Kong stock market rose last Friday. The Hang Seng Index opened 230 points higher and then expanded its gains, reaching a high of 475 points, up at 26,006. It closed up 446 points or 1.8% at 25,976. The H-share index rose 145 points or 1.6% to 9,079. The Hang Seng Tech Index increased 103 points or 1.9% to 5,638. The total market turnover for the day was 242.6 billion Hong Kong dollars. However, over the week, the Hang Seng Index still fell 109 points or 0.4%. The H-share index dropped 119 points or 1.3%, and the Tech Index declined 24 points or 0.4%. All three indexes ended their two-week winning streaks. Southbound funds net sold 5.287 billion Hong Kong dollars in Hong Kong stocks. Among them, net buys included Meituan at $2.482 billion, Xiaomi at $2.361 billion, Ke Holdings at 996 million, and Kuaishou at 598 million. Net sales included Alibaba at 3.368 billion, Tencent at 996 million, Hua Hong Semiconductor at 735 million, Meitu at 593 million, SMIC at 578 million, CNOOC at 467 million, and ZTE at 156 million. According to statistics, Southbound funds have net bought Xiaomi for 11 consecutive days, totaling 10.768 billion. Net bought Meituan for 3 consecutive days, totaling 4.08 billion. Net sold SMIC for 4 consecutive days, totaling 1.55 billion, and net sold Tencent for 3 consecutive days, totaling 1.716 billion. Technically, the Hang Seng Index surged back above the 10-day, 20-day, and 100-day moving averages. This is the second time in the past 2 months that it has fallen below the 100-day line and then risen back above it. Therefore, the 100-day line seems to have lost its significance, with the most important support level still at 25,145 and the key resistance at 26,265. The three major A-share indexes fluctuated individually in the morning last Friday, but all rose in the afternoon. The Shanghai Composite Index closed up 16 points or 0.4% at 3,889. The Sunshine Component Index rose 110 points or 0.8% to 13,258. The Chinex Index increased 30 points or 1% to 3,194. The combined turnover in Shanghai and Sunshine was 2.0899 trillion yuan. Summarizing the week, the Shanghai Composite fell 0.3%. The Sunshine Component rose 0.8%, and the Chinex gained 2.7%. The renminbi central parity rate against the US dollar rose 48 pips to 7.0638 per dollar. The People's Bank of China announced that new loans in the first 11 months of the year total 15.36 trillion yuan. Based on this, new loans in November were 390 billion yuan, below expectations. Additionally, the cumulative increase in social financing scale for the first 11 months was 33.39 trillion yuan, 3.99 trillion yuan more than the same period last year. Calculations show that the social financing increment in November was 2.49 trillion yuan, above the market's expectation of 2.2 trillion. November's credit market showed a pattern of strong social financing but weak credit, reflecting the direct loan demand. The real economy still needs recovery, while non-credit financing such as government bonds played an important role in supporting real economy financing needs. At the end of November, broad money M2 grew 8% year-on-year. Narrow money M1 grew 4.9% year-on-year. Currency in circulation M0 grew 10.6% year-on-year. The growth gap CSIS difference between M1 and M2 was 3.1 percentage points. November CSIS difference data reflects the current characteristics in China's financial system of plenty of money but slow circulation, meaning total liquidity M2 remains stable, but funds with immediate purchasing power and investment inclination M1 lack growth momentum. On Sunday, the General Office of the Ministry of Commerce, the General Office of the People's Bank of China, and the General Office of the Financial Regulatory Authority jointly issued a notice on strengthening coordination between commerce and finance to boost consumption with greater efforts, proposing 11 policy measures in 3 areas. These include increasing financial support for key consumption sectors, enhancing consumer financing services for large durable goods and digital products to tap into upgrade potential for goods consumption, promoting cooperation between financial institutions, platforms, and key merchants to enter shopping malls and supermarkets, improving installment payments, credit cards, mobile banking, digital renminbi, and other product service models to better meet consumers' renewal needs. In the Hong Kong stock market, power equipment stocks performed strongly. On the fundamental side, the construction of a unified national power market is accelerating, with grid investments expected to exceed 4 trillion yuan during the 15th five-year plan period, a significant increase from the 2.8 trillion yuan during the 14th five-year plan. Among them, main grid construction to achieve interconnection of the national grid network is a key support for building a unified national power market and will be a priority direction. U.S. stocks fell last Friday as the market continued to sell off tech stocks and shift to cyclical stocks. The fear index VIX rose 0.9 points or 6% to 15.7. The Dow hit an intraday high but then reversed, closing down 245 points or 0.5% at 48,458. The S&P 500 fell 73 points or 1.1% to 6,827. The Nasdaq dropped 398 points or 1.7% to 23,195. The Nasdaq China Golden Dragon Index, reflecting Chinese concept stocks, fell 23 points or 0.3% to 7,750. Hong Kong ADRs suggest the Hang Seng Index will open 286 points lower today at 25,690. For the full week, the S&P 500 and Nasdaq both closed lower, down 0.6% and 1.6% respectively, while the Dow rose 1.1%. The Nasdaq was dragged down by AI stocks. Broadcom fell 11.4% after its AI sales guidance missed expectations. Oracle, which had dropped over 10% on Thursday, continued to fall 4.5%. Reports indicate Oracle has delayed the completion date for some data centers developed for OpenAI from 2027 to 2028 due to labor and material shortages. Oracle responded that completion was originally set for 2028, not 2027. Rumors suggest China has figured out the U.S. strategy, allowing it to purchase Nvidia's H200 chips and may choose to refuse buying them, opting instead for domestically developed semiconductors. Nvidia fell 3.3%. Nvidia responded that the company is working with the U.S. government to apply for H200 export licenses for reviewed customers. Large tech stocks were mixed. Microsoft and Meta fell about 1%, while Tesla rose 2.7%. Rumors say SpaceX may go public next year, aiming to raise over $30 billion. Musk responded that the report is accurate. However, Musk had earlier denied the company's valuation reaching $800 billion and clarified that NASA is expected to account for less than 5% of the company's revenue next year, with the Starlink project being the largest revenue source, and if there is no situation of SpaceX receiving NASA subsidies. Lululemon beat quarterly expectations with its CEO leaving next month. The stock rose about 10%. Foreign media reported that US President Trump is expected to sign an executive order as early as Monday to reclassify federal marijuana regulations, which would subject marijuana companies to different tax rules and help attract investment. Marijuana product producers Tilray Brands and Canopy Growth surged 44% and 54% respectively. Marijuana greenhouse operator Innovative Industrial Properties rose nearly 9%. The Amplify Simo Cannabis ETF jumped over 50%. Our stock pick today is Dongfang Electric, stock code 1072. Dongfang Electric is primarily engaged in the development, design, manufacturing, and sales of advanced high-end equipment such as wind power, solar power generation, hydropower, nuclear power, gas power, thermal power, camel vessels, energy conservation and environmental protection, power electronics and control, hydrogen energy, energy storage, etc. It also provides engineering contracting and services to global energy operators, with its products and services covering nearly 90 countries and regions worldwide. The group possesses a complete energy equipment manufacturing and service system capable of mass producing 5 to 1 million kilowatt level hydroelectric generator units, 135 to 1.35 million kilowatt level ultra supercritical thermal power units, 50 to 1.75 million kilowatt level nuclear power units, heavy-duty gas turbine equipment, direct drive and doubly fed semi-direct drive full series wind turbine generator units, and high-efficiency solar power station equipment. The group has achieved a breakthrough in major technology going global with its independently developed F-Class 50 MW 50 megawatt heavy-duty gas turbine successfully securing an order for the combined cycle power generation project in Southbound region, Kazakhstan in 2025. This marks the first time China's heavy-duty gas turbine has achieved whole machine export, signifying the group's formal entry into the international mainstream energy equipment market, which is expected to alleviate the global gas turbine supply-demand gap and accelerate the overseas expansion process. In terms of performance, in the first 3 quarters of 2025, the group's operating revenue reached 55.522 billion yuan, a year-on-year increase of 16.03%, and net profit attributable to the parent company reached 2.966 billion yuan, an increase of 13.02%. In the third quarter alone, revenue grew 20.69% to 17.37 billion yuan, and profit grew 13.22% to 1.056 billion yuan, demonstrating strong operational momentum. In the first half of 2025, the group achieved new effective orders of 65.485 billion yuan, a year-on-year increase of 16.78%. As of mid-2025, the group's orders in hand exceeded 140 to 150 billion yuan, setting a historical record for order scale. At the same time, the order structure has been optimized, with new orders mainly concentrated in clean and efficient energy equipment and renewable energy equipment, accounting for over 60%. Recommended buy price $24, target $26.5, stop loss $22.5. I do not hold the above mentioned stock.